Hey guys, Jerry here at Greystone Trading. I'm making this video for the YouTube channel, but I'm also making this for the community as well, of how I backtest a day of trading on trades that I did not take or trades that I could have taken if I was on the screens. I trade from 10 a.m. to 11 a.m. and from 2 p.m. to 3 p.m. I trade the morning session. I trade that Monday through Friday, and then I trade the afternoon session Monday through Thursdays. I will look at the charts sometimes between 1:30 and the 2 o'clock, and then I'll also look from sometimes 3 to 3:30. Depending on how busy my day is, I like to try to limit my trading windows for 2 hours. I find myself to find more high quality setups. I also find myself to not overtrade. I also find that those are the optimal trading windows for the strategy that I use. So my levels are set from February 17th. Nothing on support and resistance is marked at the moment. My all-time highs are marked on there from every time that SPY has set a new all-time high in the New York session. So I'm going to show you quickly of where my levels that are coming from the day before on this video. I have my PDL touches and my PDL wick at 675.78, 675.81. And I'm grabbing the lowest level in the most touches and then the absolute low of the day. I mark the previous day open. I mark the previous day close. I mark the PDH wick, which is the previous day high. And I also mark the same thing on the touches. So the same thing that I do for the low of the day, I do for the high of the day. Then I mark the aftermarket highs and lows. And those are the Asian market / Tokyo market. Then I mark the pre-market low and the pre-market high. Those levels are what is used, the European market or the London market, which we call the pre-market low or the pre-market high. Then I use the New York session as what we trade. And that is obviously open from 9:30 Eastern time to 4 p.m. Eastern time. So this, my trading window starts at 10. One of my hard rules is not to trade a news candle. On February 18th today, we did not have a news candle. I had this lower level here marked as resistance. I did not take this at 9:50. I was waiting for some clarity here at 9:55. And I'm going to grab my lines and put them to you how I took this trade. And then I also did this in front of several hundred people on our live Zoom calls that we do 9 times a week. So I had this level here marked the swing point. This candle closed above it at 9:55. But I usually do not trade until 10. However, I did take this trade at the 9:55 close of this candle. It put me in this candle here, which is the 10 o'clock candle. I'm okay with trading 9:55 and onward on non-news days. On news days, my hard rule is I wait till 10. So I had this level here. I had an upper level of overarching resistance at 686.45. We did not come up to it. We closed below it with plenty of draw up to it, in my opinion, at 686.17 up to 686.45. Now, the way I trade, overarching resistance and underlying support, that is what I'm marking for my draw area. That is not a precise number. That is a target of what I am predicting that SPY will move to. We took this trade here, got beautiful distribution up. I took profits a little quicker on this than I normally would when it started messing this area before it immediately flushed through it. I took profits a little sooner. I usually wait for 8 to 12% are my target prices. I did not get that 8 to 12% on that. I only got 7% on that. However, I look for 12 to 15% on my quarter that I take on my next set of positions. And I got a little over 16, 17% on that. So it balances out the trade, or helps balance out the trade like that. And then I got my runners all the way into like the high $2 onto this red wick here. I got stopped out of the trade. This candle came down and reset. I gave it a little bit of time. I established in real time a new resistance at the top. This candle here comes down, goes below it. I had established an upper level of support that it never came down to at the 687.18. This green candle here at 10:10 closes above it. I took another trade. I got 3/4 of my positions off. My trailers got stopped a little bit above where my 3/4 positions did. Phenomenal movement, really good trade, really good follow through. Then I had marked an upper level of resistance again with real time with these two red wicks. You can see clearly here where the sellers took control. The sellers took control. Red candles doesn't flush the market, but it was really struggling to get above that. One could argue that the level could have been with real price time. We could have moved it down to 687.90. I held it at 688.15, being that those two red wicks had rejected it. However, we're in very strong bullish structure. So back testing this, I took this trade here with the close of this candle at the 1040 candle, and I got a half off and break even. However, back testing this would have been a really nice clean move. However, watching price in real time and the way the contracts move is you would have got filled. You would have probably took your half off. You would have got a really good half off at like your 10 to 12% if you waited patiently. It did move quickly, and then it did come back and stop, and then it ended up closing there. So the same results on this trade here with the lower level and the upper level. So this just gives me a little bit of confirmation of what's happening the rest of the day and how to trade and proceed forward in our current market conditions. And those were my 3 trades for the morning session. Then I'm going to move my lines out of the way. And then I'm going to show you how I would assess the afternoon session. So coming into the afternoon session, let's say that you were going to trade from 1:15 or 1 o'clock up to the 3:30 window. For me, that's just a little too much screen time. Other people love that. I don't personally like that much screen time. So I would very, very clearly mark resistance at 688.75. You have several touches, rejections of the bodies, wicks, combinations of all that. That to me, one could argue it could be a little bit higher at that 688.82 with more touches or less touches but higher wicks. For me, a good firm candle above that would have signaled calls all day. Now, if we're going to look through the from the 1 o'clock time on, which is here at this green one. Now, we have all this information between our 11 and our 1 session, right, which is the lunch session. So I don't typically trade that. The volume can be a little less. Follow through is not quite as nice for the strategy that I use. So if we would have used a upper level, and I'm going to grab support here. If we would have used this upper level of support, focusing and emphasizing on real price action, right, the current price action. We're reading through a lot of noise here. This would have been a very good trade. I probably would not have taken this one. Let's say this trade closes here at 1320. I was not on the charts at this time. This was a really nice setup. And it comes down, closes firmly below the level. Great distribution on this candle down. Like I said, I did not take that trade. However, I was on the charts around 130 or so. So I would establish a new level of support. This candle did not close firm. This candle did not close firm. I did take this this red candle here. Now, we could also say current price action would bring it a little bit lower. I kept it in line here because all it did was close below it, but it never closed firmly for the continuation down. In this trade, I was a little bit more assertive with it, with my my underlying support. I was expecting to go risk-free here. I took this trade. I got a full trade on this candle, 3/4 out. My trailers got clipped there. It wasn't these big runners or nothing like that in our position. And then we have this nice consolidation range. So I'll clear my lines back out, showing you guys how I finish this up. So I have my support out of the way. I'm going to leave resistance where it's at. That has not changed yet. We had FOMC today, and I had established in real time a resistance level here after the green candle came at 1400, which was our FOMC minutes. Nothing surprising there. We kind of knew what was already happening. And we had all of these touches here, and my good friend Ryan and coworker did call out this trade in real time on his session that he led today at 2 p.m. We took this trade here. It kind of retraced up. It never came close to our stop. I think it might have came like maybe 4 or 5 ticks, maybe $4 or $5 away from our stop. And then it ended up flushing really nicely, and we got a full trade on that. Then he did not take this trade. And then just back testing and showing you guys in real time, this support level never broke thesis. Like this comes up and retests us, stops us out. But this is a clearly bearish structure now. We have very, very clear where this comes and tests support, but it never breaks it. This candle closes firm. He had a little bit lower level of resistance than I did. I was using my same support at 686.87. Another firm close. I re-entered here. I got a really good full trade with huge runners on this one. I was out of most of my trailers when he had his level confirmed, and it broke 686.16, and I think he was using a level of 40. When it broke this level again, I re-entered, so now I was managing 3 trades. I was in from my trade earlier with stragglers that I left behind at break even. I was in this trade with my runners, and then I was in another whole positions there. So it was a little complicated, a little hectic, but all of it going very favorable with all this down pressure. And then I rode this wave all the way down to the previous day high wicks, and then my trailers got hit on all of those, for the exception of the stragglers, and then I was able to move those down later on in the day for almost 100 points on those moves, not quite, like 80 something points. So just showing you some trades that I took throughout the day, how the price action works, and how those clean set up. So again, if you were to look and reestablish support, let's say you were to establish support in this clean structure at 1405, you have your firm candle comes down and distributes nicely for a full trade. Let's say you're playing this now, and let's say you're going to use current price action. This candle comes, does not test it. It does reestablish it. Super, super clean. One could argue that you would bring resistance down where this is support, 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 and now it's resistance, resistance, resistance. You can see where it rejects it at 1340. You can see it where it rejects it at 1350. You can see it rejected at 1355. You can see it rejected at 1400. You can see it rejected at 1405. Even though this is the FOMC minutes, this is red folder news. Closes below it, it comes back on it here on the green candle, comes back on it here, confirming that now is resistance. New level of support's formed. It closes below it at 1430, the very conservative entry after all that selling pressure, and another full distribution down. And then it starts to establish another level here, and by then it's 1445. The session ends at 3 o'clock, and we had already had several really good trades. So let's say, hypothetically, that you were looking for one more trade. After a beautiful distribution day like this, probably should walk away with the wins and not overtrade or give much money back. You get another firm candle close below it here, right below the previous day high wick, right below those previous day high touches. I would not have taken this trade with it interacting perfectly on the previous day high touches. Usually those are really good reasons for me to stay out of a trade until it breaks those levels. However, this trade would have followed through, and you would have got another distribution out. And then the 3 o'clock window comes, and you can trade up to 3:30. However, I don't typically trade that. We're clearly in bearish structure here. This candle here takes out the previous day high touch at 15:30. This is past my trading window. However, if you were to take this above the previous day high touches or above this little swing point, stepping point here at 685 flat, which is kind of a psychological number we use, you would have got a nice distribution up on your calls. Depending on how you manage them, you would have got 3/4 off to maybe even a really good full trade. And then, but that's after the trading window, so I would not have stayed away from that. But that's how I backtest and use my strategy in real time. Today was a beautiful day where lots of clean levels were respected and all the follow through was there. Hope you guys find this valuable. And if you're interested from learning from me, there's a link below in the YouTube for you guys to check out where we do live trading 9 days a week. Thanks, guys.